Okay, good evening, everybody. Let's go ahead and get started. Want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a pretty good evening. It's fun to see a lot of you guys in the overnight trading webinar that we just did a few moments ago. And I'm stoked and ready to go for COT report. I've got a good plan for today. What I'd like to do today in the COT report webinar is show you guys how I find currency pairs that are lining up for a reversal. Okay. So this should be very helpful. How I use the scanner, look at the COT data, and figure out like what the top trades of the week are. Okay. So we obviously have the scanner that kind of gives you suggestions on like these are the currency pairs that are likely to go a specific direction. But I want to kind of go into some more detail on like which currency pairs are likely to get a reversal soon. So I had a few people ask me to explain this, so I wanted to make sure that we cover this. I think you guys will really enjoy it. And I think it'll make some sense. And I think it's something that will help, especially the new folks in the program, to get value out of the different scanners that we have. And yeah, I think it'll be very helpful. So let's jump into this. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's go. Let's go directly to the scanner. First of all, just a little rundown on what COT data is. I know this is probably not going to be the best webinar if you're looking for just a basic rundown of what COT data is. However, I will explain it in some detail. Basically, the COT report is it's called the COT data or data, and it stands for Commitment of Traders. It comes from the CFTC. They're a financial regulatory authority here in the United States, and they monitor what the big banks are buying and selling on a regular basis. As far as currencies go, they look at futures, they look at CFDs, all that kind of stuff. They monitor and regulate. Okay. And the reason why this data is really important and helpful and useful as a trader is because we're able to figure out what the banks are buying on a week-to-week basis. So why would that be important to you and me? I think it's pretty obvious, but it's important because the banks are really good at trading and they also control the markets. Okay. And so if they start to accumulate a position over several weeks, that's a really important detail to people like you and me, because if we see them buying something or selling something, um, it's a tremendous opportunity, right? Like it's an opportunity for us to um like get insight on what they are doing, right? So that's what the COT data is in general. Okay. And so because it's so powerful, we put together these scanners. We have Steve's scanner, which helps us with weekly trades. We also look at it to get data on sentiment, the long-term footprint of COT data, and it specifically looks at the 3 week and the 5 week shift in bank data. We also have this COT scanner, which you're looking at right now. And the COT scanner is found right here under the members section. You click on it right here, and it basically tells you just what the specific shifts with every currency pair is with the banks over the last several weeks. So, for example, if I filter this, I can come over here and click this, and I can filter this by the 1 week shift. And then this will say, okay, the like with the Aussie Kiwi, it has a 16.80% positive shift this week. What does that mean? Well, it means that the banks increased their positions to the tune of 16.8% on the Aussie Kiwi just in the last week. And that's pretty significant. As you use this, you'll kind of get a feel for what's a big shift or what's not. In the future, I want to figure out how to color code these. It's going to take me some time to program it. I'm mostly a trader, so bear with me. It's already a miracle I was able to put a site together. So, um, and build a scanner and some tools. It's just a miracle that I was even able to do that. But so bear with me as I try to improve these tools, because I think that would be a really nice function to be able to kind of visually see this better. But for now, as we're learning to use this together, You have the numbers which tell you everything. And that's the most important part if you think about it, is just what does the data say? And that's all here, right? So you'll get a feel for this as you filter, and that's the challenge I give to each one of you is as you go through the scanner, spend some time, 10 minutes, 15 minutes, 20 minutes, filtering each one of these to get a feel for like, okay, what is a 1 week shift like? What's a big 1 week shift? What's a big 2 week shift? What's a big 3 week shift, right? Okay. So, like, if I filter this, like I said, the biggest number here as far as positive shifts go is this Aussie Kiwi at 16.8. And then if I filter it the other way, you've got negative shifts, right? This NZDJPY, that's a negative 21.69% negative shift. What does that mean? Well, that means that the bank sold the NZDJPY pretty aggressively last week, you know, 20 to the tune of 21.69. Then if you go to the next column, you can filter these by the 2 week shift. Okay. What's the 2 week shift? Well, that's not how much people think this is like how much the bank sold 2 weeks ago. That's actually not exactly what this is. That's partly true. But what the 2 week shift is it's the collective change over 2 weeks. So it's the most recent week plus this change from the week before. So it's the collective change between this week and the previous week. That's what the 2 week shift is. Okay. And the 3 week shift is the same thing as the two, but now you're adding another week. So it's this most recent week, this shift, plus the shift from the previous and the one from 3 weeks ago. That's what the 3 week shift is. And that's the one we're actually using the most. If you guys haven't noticed yet in the live trading calls we do in the mornings, you probably have noticed a very specific focus on the 3 week shift. Why? Like, why are we focusing so much on the 3 week? So what we've kind of discovered, and this has been kind of a really cool thing. We're calling out a lot of really cool signals with this. The 3 week shift has been so significant because from what I've experienced and what you guys have seen as well, is it seems like these banks, they go on these like 2 to 4 week, averaging like 3 week campaigns. Okay, that's the name we've been given it. We're making this terminology up, right? So we're calling it a campaign. They go on these campaigns or raids in the market where they go out and buy stuff or sell stuff for like 3 weeks. Okay. And as an average, maybe it's longer, maybe it's less, but 3 weeks seems to be the average. They go out and buy stuff for like 3 weeks and they'll build a position. And then usually those currency pairs are likely to see a significant move in that direction in the coming week. Okay. And if we can actually see, and this is the cool part, we're going to get to this. We're going to spend quite a bit of time talking about this component. But if you actually see the market kind of going sideways, but there's a significant shift on the 3 week shift, or even gone in the opposite direction of what the banks are doing, then usually there's some kind of reversal that's imminent in the market. And that provides a very unique and large opportunity for us to make some pretty good money, right? So that's what the 3 week shift is. It's very powerful. And usually the 3 week shift has more to do with what the market's going to do this week than even the 5 week shift. So you guys have also noticed we use the 5 week shift in determining, which direction we should go this week as well with the weekly signals on the Steve scanner. So we use the 5 week as well. But I've actually programmed the scanner to give a little bit more confidence and what's the word? Give it a little bit more clout and importance to the 3 week shift, just slightly more. So it's a little more zesty. So like if the scanner's like, okay, let's go buy this pair, it looks at that 3 week shift a little bit more. And if it's a pretty big shift, there's probably a pretty good chance that that's going to be a signal for the week. Okay, so we've really used that one, but you don't want to underestimate some of the other ones too. The 4 week shift's also really great. 2 weeks great too. Sometimes you got to be careful with the 2 week though because it's still a little premature. Um, but not necessarily. There were lots of trades this week where the 2 week shift did great things. In fact, something that was pointed out to me, if you look at the pound dollar.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Like if you come up here and search GBP, USD, somebody, was it Muhammad or was it Rodney? One of you guys or both of you guys pointed this out. The 3 week shift on the pound dollar is pretty negative. So that's why we've been looking for a sell. But if you notice, the banks have actually started to begin a buy on the pound dollar. And I think that's one of the things that, maybe we should have focused on that a little bit, because you can see that the 1 week and 2 week is starting to flip positive. And so even though the 3 week was so negative, maybe we should have paid closer attention to that. So anyway, it's a good learning experience, but something to pay attention to. If you look at other pairs like the Aussie dollar, that's one that's been just positive, 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 right? So let me show you how to read this. So if you look at the Aussie dollar, obviously that has gone up, as you guys know, big time this week. It's had a huge run. Oh, by the way, would somebody set an alarm and text, let me know in the chat here. There's unemployment on the Aussie, and I'm curious to see what the news does in about 20 minutes. So when we're like 3 minutes to like at 27 after the hour, would somebody let me know in the chat box? Unless I see, like, if I keep talking, just let me know in the chat box. Just be like, hey, Steve, time to stop. Let's go look at the charts. I want to watch the news event. So somebody, put an alarm, let me know at 27 after the hour. So, okay, cool. So yeah. So anyway, Aussie, up to this point, maybe that'll change in 20 minutes, but up to this point, as you guys know, these pairs have just been flying, right? Like Aussie dollar is just flying off the shelf right now. Um, Big time. It's been going up and up and up. And that makes sense because it's just been this consistent buying. So how do you read this? So when you look at this, you can see like this 11.45% positive shift. Anything above 10 on a weekly shift is pretty significant. Like it's definitely something you want to look at and be like, okay, yeah, the banks really, they put a stamp on that. Okay, that's a pretty big change. Um, and then the 2 week shift is also pretty big. It's 19.41. So that means collectively over the last 2 weeks, the banks have added 19.41%. And then over 3 weeks, they've done 22.37. And and then you'll notice, and this is a really good teaching moment right here. So if you'll notice between week 3 and week 4, Week 4 is also positive, but it's not as positive as week 3. Okay, so what does that mean? What that means is that about 4 weeks ago, there was probably a slight negative shift because the fact that the 3 week shift is bigger than week 4 tells us that there was some kind of like it probably was negative. Okay, that's what it means is that 4 weeks ago there was a negative shift. And that thus why the combined shift over 4 weeks is not as big as 3 weeks. Okay. So another takeaway is that the banks have been buying the Aussie dollar for 3 weeks consistently, right? So now if we go over to the Aussie dollar, like if we actually look at the charts, um, and pull it up here, you can see that it's like I said, since the beginning of the week, which is this yellow line right here is the beginning of the week. It's just been going up and up and up for the last 3 days. And that makes sense, because the banks have been buying so much. And there's other reasons why this is going up. We talked about those technical reasons like the cup and handle, the flag pattern right here, the reverse head and shoulders. All of that stuff led to this Aussie dollar continuing to the upside this week. And we talked about that at the beginning of the week. Um, so okay. So, and it's one other thing I'll point out is they've been buying for 3 weeks. So this is 1 week right here. This is 2 weeks. This is 3 weeks. So they've been buying for 3 weeks consistently. Normally, I don't like to trade currency pairs that are already up so big because that means the banks have really made their money. But in this circumstance, we decided that the banks were not done buying. And how did we know that the banks were not done buying this? A lot of this had to do with the technical side. Like we were able to look at this and say, oh, okay, well, um, we broke a trend line structure right here. I'm going to draw this out. Um, we broke this structure, this trend line. Oops, I got to put this back right here. We broke this trend line right here. Um, this is where it broke. And so the banks have been buying for the last 3 weeks, yes, but it looks like they weren't done yet. Okay. And then we also had at the start of this week, we had a reverse head and shoulders pattern right here. Here's the shoulder, head, shoulders, right? All of this was buying pressure. And then we also had a cup and handle. This is your cup, this is your handle. So all of that was bullish. So anyway, we don't need to go into all those details, but this is one that we looked at and we're like, oh yeah, this is one we should definitely look for the buys because not only are the banks buying and so aggressively, um, even though the banks maybe have made their money, I don't think they're done yet because all the technicals lead to a continued buy. But what's so cool about this is so many traders out there, they only trade technicals, right? They're like, okay, cup and handle, buy. That's it. That's all they do. That's like, okay, I'm going to put all my hard-earned money on this trade because it's a cup and handle. Or it's, oh, it's a reverse head and shoulders. I'm going to put all my money on this trade. That's not, in my opinion, that's not good enough, right? Like if you can take your technical analysis and add it to COT, but more specifically, I think it's the opposite. Take COT and then add technicals. To me, that's more important. Like that's a much better, um, like uh that's two-step authentication. Like you're getting a much better trade when you add the two uh together, right? So it's finding out number one, what are the banks buying from the COT scanner? Okay, great. And then number two, finding out what currency pairs are showing bullish symptoms on the charts themselves. And to me, that's where everything marries each other and things just come together. Okay, let's look at another. I want to show you guys another way to read this. So the preferred way to use the COT scanner, and you guys, by the way, so many of you have been doing such a good job with this. Many of you have sent me messages on Telegram or you've sent me emails. By the way, you guys can actually communicate with me on the site right here. If you just hit this little chat box button, it'll open up a chat message and we can chat that way too. I may not respond right away. I'm the only one that monitors this, unfortunately. Maybe someday we'll get another person to monitor that chat, but you guys can also talk to me that way too. So some of you guys have done, and you guys can send pictures and images that way too, attachments. So it's kind of nice. Um, all right. So what's another way to read this? And a lot of you guys have sent me stuff on this right here. So What we want to do is like find currency pairs, for example, like the franc yen. Okay, so we've talked about this one. Um, this one's had a pretty big negative shift over the last several weeks, right? The franc yen, it's really big negative shift last week. The bank sold 16.33 percent on the franc yen. It was a huge negative shift. And then over the last 2 weeks, again, more selling, minus 20.67. And then you look at 3 weeks, the bank sold 24.33. Over 4 weeks, 29.92 negative, and then 5 weeks, minus 36.28. So much selling. Every week, there's been more and more selling. We call that, again, that's called a campaign when the banks go on these multi-week long selling agendas. Now, when you go look at the chart over the last, you would think the market's going to go down, right? Right? Because that's what the banks have been doing. But sometimes, well, it's been going down today. But what has it done collectively over the last 3 to 5 weeks? Let's see right here. So let's go to this weekend indicator that we've been using, and let's look at the last 3 to 5 weeks. Okay, so here's 1 week between here and here. Here's 2 weeks between here and here. And between here and here, that's 3 weeks. And between here and here, that's 4 weeks. And then if I go out just a little bit further, this is 5 weeks. So this is where they started selling. That wasn't necessarily a really good spot to sell necessarily. As you know, it's actually gone up. So this market went up for the last, well, it came down about 2 weeks ago pretty hard, really aggressively came down. But the banks have been just loading up on sells. Okay, so they've been loading up on sells. Meanwhile, this market actually has gone up during this time. It's now, from where they started to sell over here, this market's actually gone up. So the reason why this is nice, if you can find currency pairs that have actually gone against the banks, like if you can clearly see that they've been selling like this one, um, then you know that this pair is at great risk of a reversal because the banks, they don't want to lose for too long. Sometimes they'll let their trades go against them for some time. They'll kind of lure retail traders into the market to help them get liquidity, but ultimately they're going to win. Okay, so this is a currency pair that they've been winning on, and I actually think that maybe this, it's too bad because we actually placed a trade right here. We got like super close. You can see how close we were to trigger like that. I'm kicking myself because that was such a like our analysis is really really good on this, but this it's no dice on that particular entry. This is a prime example of using if you guys came to that last webinar, we talked about the modified martingale technique. This currency pair would actually be a pretty good pair to use. And the reason why is because if you can catch the banks losing money, which we caught them red-handed, they're actually losing money on this trade. Um, the modified martingale works really, really well because when the banks get their way, everything just like boom, just goes in your favor big time. So I think the banks are um I think this is like one where this kind of thing where you find the COT scanner, you look at the COT scanner and you see consistent a selling agenda or a buying agenda. If you can verify that the market has gone against the banks over the last 3 to 5 weeks, like we have here, that modified martingale is like a really good technique for it. So just to give you some trading ideas, if you guys want to use that, I'm never going to post a signal with the modified martingale for many reasons. One of them being it's it's a lot of trades. Like it's not just a quick little like here's your signal, here's your entry, like that. That's what the signals program's for. That's what the telegram's for, is to give you guys a very simple approach. The downside to those signals, though, is that you're going to have a lot of good trades that never trigger. And that's just going to be the reality with any signals program out there. And it's going to be the same with ours. But still good analysis, right? You're going to learn a lot of things from those, and you are going to have plenty of trades that hit pretty well with signals. Um, we've had many, like last week and the week before, we had like almost all winners. And then this week we're still on the hunt for a few trades. I'm sure we'll get a few. This one we were just like I said, just a hairline away from triggering into a really good trade there, but it's okay. All right, so but why did we take this trade? Why did we look for this? Why are we still looking for sells on the franc yen? Because we have verified where they sold. They sold over here. They sold here. Actually, every week they sold. They sold here. They sold here, 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 and they continued to sell over here. So the fact that they just continue to sell tells you everything you need to know, right? It tells you that they have an interest in getting this market lower. Okay. So, I just prefer to, if I'm gonna err, I'm gonna err on the side of the banks every time, right? Like I'm gonna follow the COT scanner and I'm just gonna go in the direction that I see them going in. And so after you get to this point where you verify that the market's going in the wrong direction of the banks, then it's just a matter of trying to find a price action entry. And that can be done by finding like an imbalance like we did over here. You can look for a liquidity zone to maybe get in at, or you could look for some kind of um, like breakout entry would be fine. Breakout would also work just fine. Okay, so anyway, there's that. Let me show you some other examples. So let's go back over here, and you guys throw out those examples. If you know of some, let's go look at some. Another one is the pound yen, right? So look at the pound yen right now. This last week, it had a minus 10.61% shift. Again, anything over 10% in 1 week is pretty good. Like that's just a pretty big shift. 2 weeks is a decent amount. It's 18.43. 3 weeks, huge. That's 39.26. That's a really big 3 week shift. Okay. 4 weeks is 53.22. And then 5 weeks is 56.08. So they just continue to sell, right? Like that's most of the selling has come in the last 3 weeks, but they have sold over 5 weeks, right? So if you go look at the pound yen, let's pull up that chart over the last 3 to 5 weeks and see what it's done. Obviously, today it's down. Um, and I've been looking to try. This is the same story. I'm trying to find really good places to sell this. It's just tough to get the precise entry. It's a tough thing. Anyway, this is another example of using the modified martingale. This would be a really good trade to do that with. Okay, so 3 to 5 weeks ago, where's that? So you got 1 week right here, 2 weeks right here, 3 weeks. Okay, let's pull this up on a bigger chart. 1, 2, 3, 4, and 5. Okay, so they started to sell over here. Obviously, not a great time to sell, but nonetheless, that's where they sold. It doesn't defeat the fact that that's just the fact they sold there. They sold here. And then 3 weeks ago, they sold here. So they actually sold a bunch right here. And then they started to pull back. But what's perplexing about it is they continued to sold right here. They sold again right here and then and this market continued up. So I think the pound yen is another one that will likely see moves down to here and here in the week or in the this week and maybe into next week. Is it'll probably go down to here or here because the banks, like I said, they're losing money at the moment. So, oh, is it time? Okay, perfect. Yeah, we'll head over there right now. So, perfect. Thanks for doing that, Sean. Um, But yeah, just same example. You want to find the banks losing money on their subsequent trades over several weeks, and then it's ultimately about following or going in the direction they want to go and looking for specific entries in the direction that they want to go. All right, cool. So let's head over. I'm gonna show. Let's just pull up the Aussie dollar. That's probably a good place to go watch the fireworks show. If there are fireworks, maybe we don't see a lot of fireworks. We'll see. Maybe I'll drop down to a lower time frame just to kind of zoom in on what's happening here. So I don't know much about this news event, guys. So basically, I thought it'd be fun to watch it. I'm not going to trade it actively. Like I'm not a news trader, as you guys know. I'm just more of a scalp trader. Um, but yeah, this is what's coming out right now is this Aussie unemployment change. And you can see the timer on it. It's got 2 minutes left. So I thought we would just watch this. I honestly, like I said, I have no idea what it's going to do. If you want to look at news, you can see the expectation. So they're saying right here that the expectation is a 3.9% unemployment rate. Last month it was 3.8%. So they're expecting this to worsen. So if this gets to if this gets to over 4%, then you'll probably see the Aussie go down. If this goes beneath that, you might see the Aussie continue higher. But who knows? News events can be weird, right? So I thought it would be just fun to watch it. But we've already, by the way, if you have not booked half your position on Aussie pairs, you got like a minute left, right? We did that earlier today. We closed out half of our position on any Aussie pairs from the weekly trades. So make sure that you um, do that if you have not done that yet. I think everybody's done that, probably. Hopefully, that's not a surprise to everybody. Okay, so right now it's not really doing much, but you can kind of see in fact, maybe we'll go to like a 1 minute chart. Last time I was on a 1 minute chart was probably months ago. So this is kind of a strange thing for me to be on a 1 minute chart, but I thought it'd be fun to let's see if it does any cool things here in the next couple of minutes. Um, but any other questions while we're waiting for this? Any other questions about the COT scanner, right? And what we're trying to do? You get those questions in if you guys have them. Let's see. This 1 minute chart has a little trend line right here. Let's see if that holds. Nope, it's not. Okay, here we go. Here comes that news. It's not holding. So it came down and we got this lower high right here. I was just gonna say that right there. So there you go. That's a big, big candle right there. That's fun to watch, actually. It's kind of for me, it's kind of nice because I'm like, I'm not really invested. Yes, I have positions on the Aussie right now, but it's not like, I mean, our stops are at break even and we've already booked our positions on this, but let's see what it does. Um, so got a big fat wick on here. Let's see if this continues. Maybe let's see if it winds up. Gap down on the 5 minute chart. Let me see if it does it here on TradingView. Now on TradingView it didn't gap down, but I wonder what are you using TradingView or I wonder if it's something else. This basically came down to this gap right here, this fair value gap. You can see right there. That's interesting. MT4. Yeah, it definitely went up before the news event, didn't it? Yeah, yeah, a lot of Aussie pairs were up big time before the news. Technically, the Aussie dollar is still up. You can see it's up 0.08% today still. And then Aussie CAD is still up. Aussie franc is now down. Aussie yen is big time down. I think that's because a lot of the yen pairs are finally coming down now. Pound yen, euro yen, franc yen, all those have been coming down. Euro, yeah, I said euro yen. All right, that honestly might be it, guys. Like that's like it's kind of calming down now. I don't know if it's got any more fireworks there, but I wonder if it'll tell us is it still pending right here? Oh yeah, so it was 4.1%. So that's kind of what we were talking about. So their unemployment rate is worse than the expectation. And so that's why the Aussie went down initially. So we'll see if it continues lower. Um, maybe it'll continue lower. Glad we took half of our positions off, but still, if you look at it from a much longer perspective here, from like the beginning of the week, let's go back to the beginning of the week. This is still like, what are we actually looking at here, right? Like if we delete all this from Sunday, it's still up like that. So the move we just saw is just that little red candle right there. You know, that's why I swing trade actually. um, that's why I do a lot of swing trading. Is because I don't really care about those little moves on news events too. I care more about, okay, what are the banks trying to buy? What are they trying to get into over several weeks? That to me, that resonates with me. That concept of buying with the banks, that makes the most sense. That's why I do that. It seems like a retrace, retest, then going higher. Let's see. Hopefully, I'd love to see this. I'd love to see it go higher. We'll see. I have no idea. Like honestly, I don't really care too much about the news. I just do what we do. We've already, like I said, we've already booked half of our positions on these pairs, so I'm thinking we're good at this point. Um, but like I said, any other questions on the topic of discussion today? So this is what I do, guys. This is what I do on the weekends mostly, is I come in here and I try to find, okay, what are the big 3 week shifts? So I'll filter by 3 week. Then what I'll do is I will then um um I'll filter by 3 week shift, find the biggest shifts I can find, and I like to see that it's a campaign. So I prefer it if it's a consistent buying or selling for 3 weeks. So if you look at like the euro pound, it's starting to turn negative. As you can see, the euro pound's starting to turn negative. It's still a pretty big 3 week shift, but I'm not as confident anymore because you can see that it's starting to turn negative versus some of these others have been just consistent buying. So if you can find consistent buying or selling and the market hasn't moved that much yet, those are the best trades. Okay. That actually happened on the euro pound last week. Do you guys remember? The euro pound was super bought up over 3 weeks. And then if you guys recall, this was our trade last week. We bought down here, or 2 weeks ago, we bought down there on the euro pound. And we saw over 3 weeks that the banks, or 3 or 4 weeks, that the banks bought over here every single week, and yet the market was down. And so we had a hunch that this euro pound was going to keep going up like it did here into the following week. And so that was the trade we took a few weeks ago. We took that US 30 trade also from last week and the week before. It's the same concept. And that's what we've been trying to do on this, franc yen. That's what we're trying to do on this euro yen is this market's been going up, but the banks have been selling. So obviously we're looking to go in that direction. Okay. So I think that makes sense. Any other questions? Let's see. Paul says, any thoughts on euro pound as we go into the final stretch this week? Um, that's a tough one. I honestly, I can't really say. I personally, I'm not taking any price action trades on the euro pound. It's too confusing to me. Like as far as like the campaign is over, the buying campaign is over that we participated in last week and the week before. Um, as far as I can tell, but it still made the cut as far as a weekly trade. Like the euro pound it made the cut as far as a strong buy goes. For many reasons. Like if you look at the scanner, just like Steve's scanner here, you can see the reasons why it made the cut. Um, because the 5 week shift and the 3 week shift are so positive, and sentiment, most retail traders are actually short right now, so that's why we have a buy signal. Um, the euro pound is still like an overall weekly buy, even though it's gone down this week. So that's why, like for me, as far as a weekly trade goes, my plan is still to hold. Um, because that's just what I do with weekly trades. So the style with weekly trades is that you just hold. Like we don't do anything with them other than we might close them before a news event like we did with those Aussie pairs. But the I just continue to hold them. Like I don't do anything with those. With the price action trades, yes, like we'll do unique things with those, but with the weekly trades, just leave them alone. So I hope that answers your question. It's not like I give it thought because you asked me like, do you have any thoughts on it? Well, I don't give thoughts really like yes, I do give thoughts. It's not like I look at weekly trades and I'm like, oh man, like we should get in at a different price. I only do that with price action trades. Um, okay, so I hope that makes sense. It's a different style of trading altogether, right? But euro pound is not one that I look at and I'm thinking, oh man, this is one that's due for a move up or a move down. It could go either direction. But at the beginning of the week, if you guys recall, I sent out these. I'm going to show you this. I sent out on Telegram here. I sent you guys um, these right here. So these are my analysis. So I'll look at like, okay, here's Aussie franc. I'm thinking this is going to go up, right? These are the ones that I'm feeling the most confident with. Like, okay, here's the Aussie dollar. I think this is going to go up this week. Obviously, that was a good trade. Here is the pound Aussie. Looking for this one to go down this week, right? And so I kind of show you the different details of that. So these are the ones that I'm normally going to be placing price action trades on. Because they're the ones that seem to make the most sense. And then I think I posted one more. I guess I didn't. I thought I posted one on the franc yen. Oh yeah, here it is. Yeah, so I was looking for the franc yen to go down at some point this week, which obviously it's now finally doing. But so these are the trades that I'm like, okay, I hand selected these ones, and I'm feeling pretty good about it based off of what I just taught you guys on the COT scanner. With that said, though, these weekly trades you get from Steve Scanner will often be the same, but they're not always going to be the same. And they make the cut for different reasons. It's not just COT data. Sometimes it's a combination of COT and sentiment data as well that provides those weekly signals. So it's a little bit of a different system altogether. This is supposed to be purely passive. This is for somebody who does not have time to take price action trades. They're busy and they only have time for the weekly trades. That's what this is about. That's why I don't really give thought, if that makes sense, Paul, to these, because this is meant for somebody who doesn't have time to make executive decisions that often. Okay, so versus like the price action trades, we do that all the time. Like sky's the limit. We can decide what we want to do with any of those trades. Okay, so I kind of created two strategies for different types of people. And so you can trade both if you'd like, or you can trade one or the other, whichever one you kind of feel like fits your style, better. So, all right, guys. Well, I think this was a great webinar. Hopefully this helps you guys figure out like how to use the COT scanner in the future. And then as a reminder, please send me your throughout the week. If you find something that you're looking at, you're like, I think this might be a good trade, send it to me because I want to give you feedback, whether that's like good feedback. Like I'll always help you guys out. I just want to make sure that you guys can look at something and be like, yep, that's a good trade, or nope, this isn't a good trade. And I'll help you kind of see the difference. So please send those to me. A lot of you have taken me up on that. Just want you guys to continue to do that. So all right, guys, well, have a fantastic rest of your evening. Thanks for hanging out with me for about 2 hours. That's super cool that you would do that. And we'll see you guys hopefully tomorrow in live trading. So thanks for coming, and we'll see you in the next webinar.